Hello, ladies and gentlemen. This is your teacher Usman Ali, and we are here to discuss exercise 5.5 solution. Now, in exercise 5.5, we are actually supposed to prepare a full-fledged balance sheet, in which we would like the whole classification that we have learned in the chapter. We're going to apply that classification, and we're going to make a complete full-fledged balance sheet. Actually, the information given to us it could be or you can say is little bit shuffled here. We just need to identify that which account should be sent where, and there are some additional information given to us related to the accumulated depreciation of the building, accumulated depreciation of the office equipment, and allowance for doubtful account value is given to us. And the fourth information we have is pension obligation is considered to be as a long-term liability actually. So let's prepare the income statement for the company. So we would follow the same format. It's just that we would try to find that if we can we can find certain accounts which are actually misplaced. Okay, now before I start, as you know from our discussion in the chapters, that we have two formats of balance sheet. One is this format, in which like first we write the current assets, then long-term assets, and then in the same line or column we identify current liability, long-term liability, and equity as well. This is the report format. The one which you have studied in your basic accounting is the account format, where you have like the left hand side in which you write down all the assets, and you have the right hand side where you write the liability and equity actually. So we do not have two sides this time, we just have like in one go, so we will solve it in the one go as well. Now the name of the company, the balance sheet for the year ended 2004, you don't need to write it again and again, and technically you should write, but I will save your time in MB, so I will just directly start with the current assets. Okay, now in the current asset section, first it's written cash net of bank overdraft $30,000, 2 lakh. It means that we took a bank overdraft, we took a loan, okay, short loan of $30,000, which is not written inside this $2 lakh because of the word net of bank. So net of bank means after this. It means $2 lakh cash does not include this thing. And if I'm taking a liability, so obviously money is coming to me, I must write it inside this. So I will give a section, okay, or start it section current assets, and inside the current asset, my first current asset is cash, and this time it do include, okay, it was 2 lakh cash, 30,000 overdraft, so this would become 2 lakh and 30,000 because overdraft also increases my cash actually. Then our next part is account receivable given. Now after cash, we do not write account receivable directly. We actually, if we have any short-term investments, any trading security or something, so we try to write those actually first. So if I come down here, inventory, and then we have trading securities. So this trading security is misplaced actually. It should be written here right after the cash. Trading securities, okay? And one thing more is trading security at cost, 1,40,000. It means when we purchased these securities, it costed us $1,40,000, but now the fair value is $1,20,000. So you do understand why do we need to have a fair value. We discussed that in the PPT, that when at the closing time we need to update, and the trading securities or these financial securities investments are valued at the end of the year actually, revalued. Okay, so we're going to write 1,20,000 here. Remember this, 140 and 120, okay? So I will write here trading securities, and we purchased them at $1,40,000, which was the cost. But now, as per the fair market value, its value is $1,20,000 actually. So this is a trading security. Okay, then let's proceed. After trading security, we can write account receivable. Net value is 3,40,000 actually. So this is not the way we present actually. We can present it even in a better way. If you remember the extra information, the allowance for doubtful account has a balance of $17,000. So remember 340 and 17. So I will write it like this, that we have account receivable of a particular worth that shortly we will know how much. And then from this we were supposed to subtract the allowance for doubtful account. Now it was $17,000 if you remember, given in the numerical I just showed you. Okay, and what was the net value? The net value was 3,40,000. It's again given in the numerical also. Okay, so it's like, what should I write here? That from that, if I subtract 17,000, it gives me a remainder of 3,40,000. So if I reverse it, I get like $3,57,000. So if my account receivable are 357, I subtract 17 out of it, and the remainder is 3,40,000 actually. So that's like easy for us. Okay. Then after account receivable, if we have any other receivables like note receivable, short-term note receivables, or interest receivables, so we can write those. Otherwise, if not, then we can actually directly go to the inventory part here. Now inventory, it's no other information is actually given. So inventory at lower of average cost or market 4,01,000. So there is a rule called LCM rule. We will study this rule in the inventory related chapter actually. So for just time being, remember it, that inventories must be recorded at LCM rule. That's it. Okay, what it is, we're gonna talk about that in detail, but in its own concern chapter actually. Okay, so let me write inventory. So just like they will be added, this will be added. So inventory we have, and inventories are actually already calculated based on the LCM rule actually. So the worth is 4,01,000 if you remember. Okay, and then if we have any prepaid expenses, so that would also be written actually. So cash is done, account receivable is done, inventory is done, trading security is done, building, office equipment, these are long terms. Prepaid expenses $12,000. So I will write it here, prepaid expenses $12,000 actually, and that's it. Our current assets section is there. We do not have anything left. Let's plus all of them. It will become $1,01,03,000 actually. We very confidently call this as our total current assets, and then we will give a heading of long-lived assets or non-current assets. So if you remember, based on our PPT discussion, in the long-term asset section, the very first subsection that we have is long-term investments. These are those investments which had a life of more than 1 year, and they are not the integral part of your business as well. We call them long-term investments. Let's see if we have any long-term investments actually. Okay, so building, office equipment, these are all property, plant and equipment. They are not long-term investments, but yes, look at this, land for future use and cash surrender value of insurance. These are our long-term investments actually. Now land for future use is, we have purchased the land and we have plans that we will sell it back on profit actually. We are not going to use that in our company. The only use we have is to sell it at capital gains, means okay, extra money. Cash surrender value of insurance. So cash surrender value is, we have purchased an insurance policy and then we have surrendered that policy. We are no more interested in that policy. So the insurance company will first subtract whatever expenses has been incurred on the policy from the money which I have paid them actually. And the net value would be called as cash surrender value of insurance. It means after all the deductions, necessary deductions, the insurance company have actually promised me to pay me this much money back from my insurance policy which I have just finished. That's $90,000 actually. So let me write both of them quickly here. Okay, so one, we have cash insurance policy. The cash insurance policy worth is $90,000 in the numerical. Okay, and the next we have is land held for future use, or you can say capital gains. The worth of that land is $175,000 actually. That's it. We do not have any other long-term investments, so I'm gonna kind of like total it. Okay, so the total of this long-term investment is $265,000. This is the total of the long-term investment. Okay, after long-term investment, inside non-current assets section, we have another section by the name of property, plant and equipment. Okay, this is a subsection. Inside property, plant and equipment, we have building and office equipment, but both of them are having net values. Net value means after the subtraction of the accumulated depreciation. Accumulated depreciation for the building is 1,60,000 and for the office equipment is 1,05,000. So let me note down them. Okay, so building value right now we don't know it, but what we know is that accumulated depreciation was subtracted and the amount of accumulated depreciation is 1,60,000 actually. So it's like, I will write here 1,60,000 will be subtracted from its value. Okay, and then the remainder would be shifted here. So the net value, if you see here, the net value is 5,70,000. So this is the remainder value. Now the question is that if this is the remainder and this was subtracted, so if I plus 570 with 160, I can get the value of the building, okay, which is $7,30,000. Likewise, I will go for equipment also. Now equipment was having a purchase value which we don't know right now, but what we do know is the accumulated depreciation value of this equipment actually, which is $160,000. So I will write here no, not 160, sorry. The accumulated depreciation value is $105,000 or $105,000 actually, and the net value of the equipment is $160,000. Okay, so what I will do is that I will plus 160 with 105 to get my original value of this. So if actually I add it, it becomes 2,65,000. You can do the verification by doing your own calculations actually, and that's it. We only have these two. So what I will do is I will plus 570, 160, or the better way it would be to do it, but that's fine if I've done it. Otherwise you can write it like here and then shift the total value here. So let's find the total of it. $7,30,000 will be the total of, sorry, okay, will be the total of property, plant and equipment actually. Okay, after this we have the intangible asset section. Okay, so let me give the heading of intangibles. Inside intangibles, let's see what do we have. Okay, look at here now. Building is done, office equipment is done, land is done, goodwill that's not done, insurance is done, prepaid is done. Only goodwill is remaining, worth $80,000. So let me just directly write goodwill here because this is an intangible asset. The worth of the goodwill is $80,000 actually, and then I can just find the subtotal of that goodwill also. So the total intangible assets will be actually equal to 80,000 actually. Then I will calculate the total non-current assets, okay, because all these headings that we had, so they were the subheadings of the non-current assets. So look at this, it would be the total of the, or let me use a highlighter for that. It will be the total of the long-term liability, this one, plus the total of the long-term investment, plus the total of the liability actually. So when you plus all of them, it becomes around $1,075,000 actually. Okay, and after that what you do is you can very easily calculate the total of assets here. The total of asset is okay, let me use I will use the same thing. So the total of current asset plus the total of non-current assets, so it would become around 2,178,000 actually. So this is actually the asset section only, ladies and gentlemen. Likewise, we will prepare the liability and equity side as well. So that's the asset side and the liability and the equity side as well. Okay, so just wanted to, you can just get a glance out of it. Okay, this is the asset side of the question. Okay, so what I've done is I've just pre-prepared some of the sections and these things to save the time actually, because the numerical is going long. So let's go to the liability side. In the current liabilities, we have account payable and we have note payable due next year. So this would be the short-term liability. Pension obligations. As far as pension obligations are concerned, it was written here, pension obligation is considered to be a long-term liability, so we don't need that. Rent payable is a short-term liability. Premium on bond payable and bond payable, both of them would be the long-term liability. So let me just quickly write it down. Okay, you have the numerical question with you, so you can understand from where I'm picking the values actually. So our account payable values is $105,000, and then we have this note payable, but the note payable, only that note payable which is due in the next year. Okay, and how much is due in the next year? We have $125,000 actually. And then we, if you remember, we got rent payable, which was also a short-term or current liability. The amount of the rent payable we had is $49,000. Okay, so let me just show you from where I took it, although we have already, this is the account payable, this is the note payable for current year, and that's the rent payable actually. So these values are also done. Okay, let me find the total of this because we are not left with anything else. So the total of the current liability would be $2,79,000 actually. I will very quickly and shortly write here total of current liabilities. So this is our total of current liabilities. Then we will go for the long-term liability. Inside long-term liability, we got bond payables, and there was a premium on the bond payable as well, so it will be added to it. Premium on the bond payable. Okay, now the company had issued bond of worth $5 lakh, and the premium is 53,000. So I will write 5 lakh. Okay, and then I will plus 53,000 with that. So actually the total of the bond related matters would be $5 lakh and $53,000 actually. Along with this, we have one account left, which is pension obligation, 82,000, a long-term liability as per the information given to us. Premium is also done. Okay, so we will write here plus, okay, pension liabilities. Pension liability value we have is $82,000, and that's it. We are not left with any more liability, so we can plus 5 lakh 53 with 82,000, and we can get a value of long-term liability, the total 6 lakh 35,000 we will get actually, and this would be called as the total of the long-term liability. What we will do is we will add the total of current and the total of non-current together, and we can get a value of total liabilities. So the total liabilities of the company, if you plus it, it will be $9 lakh and $14,000. Okay, then we have the equity section. So bond is done, this is done. Equity section. Common stock $1 par, authorized 4 lakh shares, issued 290. So it means that there's a common stock. Every common stock par value was $1, and the government has authorized to sell 4 lakh shares, but only 2 lakh and 90,000 shares were issued, and that money is received also from investors. But we issued it at a more value than $1, so we received 1,60,000 more. So in shortcut, I will only write here common stock, though technically you should write the full statement which you see there, full information actually, but I will just save a little bit time in MB, so I will just write here common stock, and the value was 2,90,000. And then we got additional paid in capital. Additional paid in capital means if the common stock is issued at a price of more than its legal value, stated value, or the par value, or that whatever the market has allowed us to do it. So we issued it at a higher price. How much total money, more money we got instead of 290, we like 290 and 160. This is the total money that we actually got from the investors actually. What do we do with this? We used to plus the retained earnings also, because retained earnings are also the part of the equity, na? So this is done, 290 is done. Retained equity value is not given. How to calculate retained equity value? It's very simple. You have total assets is equal to total of the liability plus total of the equity. I will reshuffle these things and I can write it like the total or let me write it like this: total of the asset is equal to total of the liability plus, and then you write here common stocks, which is this one, sorry again, plus we got paid in capital actually. Okay, so I will write here let me just take it here so you can very easily pick it now. So we will get paid in capital also, and plus retained earning. So what I just did is I just shifted the total of the equity into these three values which are given here. If I shuffle this thing, it would become retained earning is equal. Okay, so I had a little bit mistake, so I just rubbed that. So it would become, if I shuffle this equation actually, so it would become total asset minus the total liability minus the common stock minus the paid in capital actually. So all these value will shift this side and it becomes minus. So if I put values here, the total of the asset we actually got was 2,178,000 actually. Then the total of the liability we have from our previous calculation is 6,35,000. Total of the common stock is $2,90,000. And the paid in capital is $1,60,000 actually. So when you solve this equation actually, you will get your retained earning value, and our retained earning value is $8,14,000 actually. So let's find the total of the equity by plussing or adding these. So it will become $1,264,000. This value is actually called as the total equity, okay, that we have, means the insider's claim. And then in the end what we will do is we will plus the total of the liability and the total of the equity in order to calculate the total of the liability and equity. When you plus it, so you will get a value of $2,178,000 actually. Okay, so and as per the equation, if you see here that the total of the asset is equal to total of liability plus equity, so total liability equity is 2,178,000, and our total of the asset is also 2,178,000. So actually we didn't had some kind of technical calculations here. What we had is we just learned the whole process of classification, that if a balance sheet is actually prepared, so what should be the first word, second, third, fourth, likewise. Okay, so it's like proper complete sections. Subsections are there, like in non-current assets we have subsections, and then this is the whole story. Okay, so this was our exercise 5-5. Thank you very much, ladies and gentlemen, and sorry for the little bit shufflings. I mistakenly, like my pen just touched the camera stand, so sorry for that. Stay safe.